So, let's do this. Earnings season. We have a lot going on here. So far, we've had some financials come out. We've had JP, Wells, Goldman just came out, and so far, guys, they're handling it fairly well. So the S&P is at a key juncture right here. We're going to talk about obviously from an LE Wave point of view. Really key decision point. So what's going to happen? What do you think? What do you think's going to happen? I'm not sure. I'm open-minded. I'm ready for the upside. I'm ready for the downside. I can't sit here in good faith and tell you I know what's going to happen in the future. Nobody can do that. What I can tell you is I am prepared with all the information that's available right now based on the fundamentals, based on the technicals, based on the intermarket analysis to make the best decision in which we can express a bias by risking the least to hopefully make an appropriate amount of return. So that's our mission. We're not here to predict the future. We're here to interpret the present and put ourselves in the best trades. So fun market. Last night, did CNBC's Fast Money last night. Got back decent time. We are settling in here in upstate New York in Saratoga Springs, which is awesome. So fun to be back home. I went up to my old ski racing mountain in upstate and did the Monday night adult race league, quote unquote, the beer league, which was really fun. So saw a lot of my old ski coaches and it's good. So life is good. Now we just got to get some clarity on where we are going. So to start here, let's go into the charts and kind of take a look at the earnings situation. We're going to start there. Let me get my list, and then we're going to roll into the S&P. So if we take a look at the companies that have reported or will report in the next 2 days, JP is out. Bank of America, Wells Fargo, U.S. Bancorp, Goldman just reported this morning, is actually acting well, the last that I saw. And then Netflix is coming tomorrow, and that's been obviously a really interesting stock. Within the FANG, quote unquote, we've seen a pretty good comeback in technology that's putting a pretty good support in this market. So Netflix is coming out tomorrow after the close. So as we just kind of scan through some of the financials here, you take a look at JP Morgan, sold off. They beat on the bottom line, but missed on the top line revenue, sold off, and then just ripped right back. Closed the gap and actually put some on. Citi, really strong move, 56 to 62 post earnings. Wells Fargo's a dog, not much going on there. Bank of America, whoa, strong move up there post earnings. And then Goldman, same thing. We just reported earnings this morning, looking pretty good. So these financials that have been so weak, starting to act pretty strong in here in response to earnings. Here, let me turn this light off now. And again, I let me just talk to you on this. This is my temporary location. I'm still in this kind of office in my new house. I do and will have a office in the future where we're gonna have a proper setup here. So this is kind of a hack setup. So again, just bear with us, and you'll see we have some pretty fun stuff in store for 19. So anyways. So I just had to turn that light off, point being. Okay. So that's that. Let's take a look at the position of the S&P and figure out why this is such an explosive juncture right now. So as we go up here, go to the S&P, here's what's going on. Here's what we're focusing on with our members. Is this the start of a new bear market? Okay. And if it is, what is the current down structure so far? Sometimes I like to just kind of take a step back and say, what am I seeing on this chart above me right here. I see a big push down, a rally back, and then another push down. Could you, as a casual Elliott wave counter, say that's wave 1, up in 2, down in 3, and we're going up in 4? No, because we're getting so strong here, you're getting overlap between this corrective wave and this corrective wave. You got to do something different. And this is how Elliott wave breaks down. And this is how you get multiple degrees of analysis by its fractal nature, okay? You literally look at the Elliott wave table, and there's multiple degrees of trends that you can use to label. So what that means is if, in fact, we are in a new bear market, I'm looking at wave 1 and 2 and wave 3 of the same degree, which this happens to be the primary degree, is unfolding. Okay? Now, if this wave 3 is, in fact, going to occur, what's interesting about this and equally scary is a traditional Fib relationship of wave 1 versus 3 is a 161% projection. That's at 2299, 2300. We already came very close to the 1618 projection. Here's the issue, though. You really can't count this as a completed 5-wave motive impulsive down. So what that means is this wave 3, all that means is still extending. It's still going. So that means for a proper wave 3 to unfold, which must look like just a clean, typical 5-wave Elliott move, just like that. Okay, for it to unfold as a clean 5-wave move, here's a little model. This is what it's going to look like, 1 and 2. So we're setting up for a mighty 1, 2, 1, 2, which gives us a possible wave 3 drop within a larger third wave. All that means, guys, is this is a move that only happens a handful of times per year or every few years. So if this is going to unfold as a 1, 2, 3, 4, 5 to complete wave 3, the Fibonacci projection that you're talking on this orange 3, if in fact this happens, you're talking easily to a 261% projection of 1 versus 3. As I told you, we came very close to the traditional 2300, which is color-coded in green. There's 200%. The 2618 or even deeper is certainly within the realm of possibility because, again, we need enough space for the 5-wave move to unfold. Okay? So if this zone of resistance, which I'm going to further clarify right here, holds, the downside is massive. I'm not here to tell you that, okay, I think that we're absolutely going to get hammered. We're in a bear market. I look at multiple scenarios. I never, I get on TV and I say, okay, here's what's going to happen in the future. That's making forecasts. When you're managing capital, and I have a significant amount of my net worth in the markets that I trade live every single day, when you're in that position, not in front of the TV camera, but in front of the web camera, I'm always looking at multiple possibilities. I never come into a trade and say, this is what's going to happen. If you do that, you're going to get skewered. As a trader, you always need to be second-guessing yourself, always looking at multiple scenarios, always covering your backside, okay? So I hope you understand that distinction, and it's a very important distinction. So if this zone of resistance, as I just mentioned, holds, this is going to be nasty. All right, this is the 195-minute chart. So let me just zoom in on this setup of 1, 2, which is orange 1, 2, and then blue 1, 2. A wave 2 traditionally will retrace a 61% retracement of the prior downtrend. We're right there. That's a 2617. On top of that, as I described on Fast Money last night, we've got a low here in October, you've got a low here in November, we've got a third attempt, a fourth attempt, and finally fifth time, whoosh, right through. We're coming back to test that as resistance. This is a huge, huge zone of resistance here. We've got the S&P up now 0.3 ahead of the open. It looks like we're going to gap right into this zone. On top of that, you could make the case that this is an ABC up, all right? If this is an ABC up, net percent distance traveled in A is equal to that of C at 2624. That's right on top of the 61% at 2617. Do you see the zone really starting to build? It's so cool that we're doing this webinar today because this zone is massive. Where's this wrong? I generally take the opinion that if a wave 2 breaks the 78% retracement, then we're wrong. 78% retracement is simply the square root of 61%. 61, let's do this, watch. 0.618 square root is 786. Okay, square roots are really important. If you take the square root of the golden ratio, 1.272. You guys will often see me use the 1.272 and 786 because that's just the way these crazy markets work. So the square root of 61 is 78%. That is a very key retracement level. If we look at wave 2 of the higher degree, look where we stopped. 61%. Guys, this stuff sounds crazy. I can't even believe I'm getting in front of hundreds of people here and talking about golden ratios and square roots and Elliott waves. I use it because it works. And it gives me context in the market. It gives me plan A, plan B, and I know where I am in the market and I know where to deploy capital. When it stops working, I'll stop using it. But that's pretty much when humans will stop acting crazy on a mass scale. So I'm wrong above the 786, and that's at 2696. On top of that, if we'd use some very traditional elementary technical analysis, we have some key daily moving averages coming in. So here's the S&P on the daily. We have the 50 EMA in green at 2620, and you've got the 200 EMA at 2704. Okay, so that's a little bit above the 78% retracement that I just mentioned, but still, you know, we want to be aware of that. You've got the 50 EMA here, you got the upper Bollinger of a +2 standard deviation at 2649, and you've got the 200-day right there. 2600 to 2700 is a massive, massive zone of resistance, okay? What if it doesn't hold? What if it doesn't hold? What if this is not 1, 2, and we're dropping into the world in third of a third? If it's not 1, 2, and I'm wrong, then it's likely an ABC. ABC down. Okay, and that means there are 2 Elliott wave corrections that are likely at hand. A triangle, as I'm showing here, which basically leaves you sideways and range bound, which I think so few people are expecting. Look at the lower scale, guys. Talk about getting context. Show me a methodology that gives you context like this. You're talking summer of 2020. It's a year and a half inside of a triangle. And if you are not prepared and have the context, like, you're going to get chopped up huge if you're just directionally trading. So if that's the case, if we start to break this upper resistance level, the approach that we're going to take with our members is we're going to go into sort of a delta neutral, slightly skewed delta, theta positive option trading approach with butterflies and condors and stuff like that. If we hold this zone in the next 100 points, we're going to get hella crazy directional buying puts, shorting the indexes, like just getting all over it. So I'm prepared either way. Don't really care which one it's going to be. I love when people come in and say, oh, the other thing I forgot to mention. Did you guys check out my latest YouTube vlog? Don't do it now, but when it's over. I went down, as you guys know, I have a, let me put this screen up. I have a relationship with Elliott Wave International. They tapped my business to be their kind of third-party trade alert provider. So we obviously I trade live capital using Elliott Wave International, which has been around for 40 years, more than 40 years. It's slightly longer than I've been alive. So talk about longevity in this business. They approached my business, said, "Hey, we want to work with you." After I went down and interviewed Prector, which was really, really cool. So I just released the vlog right here where I went down. I was hanging out with Prector and his corporate team. We were out in the boat, kind of messing around. I was playing drums in his basement. It was really fun. So have a look. You get a behind the scenes look at who Bob is. We had so much fun. So it's a great working relationship. We're out kind of shooting the breeze, drinking some adult beverages out in the boat here. And it was fun. So go ahead and have a look at that video if you like. And yeah, it's been great. So I've learned so much from those guys. I've only been doing Elliott Wave for, I don't know, 12, 14 years now. But I'm still learning from those guys. So anyways, and I see Donald calling me there saying, oh, thank you, Robert, saying my Wave 2 isn't correct. Donald, are you talking about which one, Blue 2 or Orange 2? I'll indulge you. Let me know which one you're talking about. And then Terry, who is my corporate director, or I guess you're my head of tech, says, I'm looking forward to this butterfly trading zone. It's possible. It's possible. So Donald, yeah, tell me which one, and I'll engage you quickly. I don't want to get too much in the weeds. I can promise you I'll run you over with rules and guidelines in the Elliott Wave theory. I guarantee you. I'll do it. I'll engage you a little bit, but I don't want to get into the specifics of the account because I don't want to lose people who are new to Elliott and don't want to be scared off until they've kind of engaged properly and gone down the gone down the proper learning path. Okay. Orange. All right. So we'll talk about it quickly. It's a simple running flat. Okay. It indicates it's a 3-wave move up in A, 3-wave move down in B, and a 5-wave move in C. It's B does approach the closing low of the origin of A. C falls short of A, which is a running flat, which indicates extreme underlying weakness. So nothing wrong with it at all. Clearly a 3-wave move, and I'll just show you right here so we can just decompose this as... That's going to be 3 right there. This is going to be 3 here. And that's going to be a 5-wave move right there. Okay. It doesn't have to make a new low, Donald. B does not have to make a new low in a running. Okay. So over to the NASDAQ. Let's keep pushing. I got a lot of stuff I still want to cover. If we are, in fact, in a bear trend, here's the best that I can come up with in the NASDAQ. This one is showing a little bit more relative strength here. We've had FANG come back quite a bit. Netflix has obviously been on a tear. Facebook has even come off the lows. Google's showing a lot of relative strength. Apple's starting to hold the 150 zone. So we're seeing NASDAQ come back. You'll notice that we're already through the 61% retracement and on the way to the 78%. This is a 195-minute chart, so this is a half-day chart. So this is not a really irrelevant moving average, even though it seems to be working. If we're going to hold, we better do it below 68.28 in the NASDAQ. This could be a big diagonal, which starts to get a little murky, but it's looking a little... We really got to start turning lower soon in order for this to play out. If not, same outlook in the NASDAQ, possibly a big old nasty triangle, okay? Within a possible triangle, that's a 3-wave move up in B. you can start to break down blue A. A is a motive impulsive. It'd be a 5-wave move. And so far, it's tracking fairly well. We're doing 1, 2, 1, 2, 3, 4, green 3, pull back in 4, up in 5. So we do have room. If we start to break that 68 level, I just told you in the NASDAQ, we have 7,000 to come. Okay, so that's the NASDAQ. From there, let's see. There are some strong stocks out there. We did put a new trade on in PayPal with our members yesterday. I'll show you the option trade. I'll show you the exact trade that we're in. This is a stock I've talked about on CNBC quite a bit. PayPal, sort of these niche Web 2.0, like Twilio and PayPal and Etsy and Square. Obviously, PayPal is a payment stock. But here's the trade that I have on right now. In the Feb 1s, we sold the 92.88 put credit spread. Volatility is pretty elevated in PayPal, as you'd expect heading into earnings. Earnings are going to be January 30th. Okay, and I'll show you the wave count here in a sec. So here's PayPal. Volatility's come off. We're in about 19 right now. Volatility has come off from the 55th percentile. So we're in the top half of the range. There was a big vol spike and that drop in PayPal, but we've come running back. From an Elliott wave point of view, where are we? Right here. No, that's green. PYPL. Okay, so from IPO, it's always tricky to start doing some analysis with a new issue, but from what I can see, it looks to be that we have sort of a fourth wave completion. Wave 3 was a beautiful extended 5-wave motive impulsive move. Blue 3 breaks down into 5 nice waves. Green 3 breaks down into 5 nice waves. That's the epicenter of the rally right there. That's the breakout. That's third of a third of a third. You know, that's a move that takes you from 40 to 60 in a couple months, 6 months. Then we fell into sideways consolidation. It's conceivable that we just did a fourth wave triangle completion and PayPal is ready to go. So we did A, B, C, D, and E, and then we are on the way up in PayPal. We're at the 100% projection of 91.02, which is blue 1 compared to blue 3. Typically, your wave 3 gets to a 1.618 projection. That's a 97.15. As I said, PayPal has earnings on the 30th. You can see that the implied volatility right here for options that expire on 1 Feb are 42%, which is a lot, 43%, which is a lot higher than the prior expiration, 25%. So this is kind of an earnings trade, but kind of a directional trade at the same time. We, again, sold the 92 puts, bought the 88s, because the assumption is that we are now in a third wave that will reach up towards 97.50. If the trade continues to work and the overall market stabilizes, I'm really going to press this trade. The expected move, according to the options market, is $6.80 until expiration, which is 16 days away. So call it $7. That puts you at about $98, give or take, from current price in PayPal. And again, squaring back up to the wave count, that puts you at a 1.618 projection. So PayPal with a stabilizing market is something we're going to be looking to look to press. Twilio is another really interesting one. I'm doing a new project with Jeff Kennedy at Elliott Wave International. And him and I are teaming up, and we're doing weekly videos that may turn out to be more. I'm just going to show you the video that we did capture yesterday. Yeah, there we go. So we actually were talking about Twilio in the recent one. I'm going to have Jeff on in the future for an interview. Great Elliott Wave guy, good friend. So we're kind of teaming up and doing a fun thing. So be on the lookout for that. I was going to try to get him on an interview today. I'm not quite ready with the technology, but soon. Soon, soon, soon. So this is one thing that we were talking about with Twilio. I am of the belief that we're about to break higher, similar wave count to PayPal, possible third wave ongoing right here. Okay. Now, there is an interpretation that is very bearish, and I'm looking to eliminate that. So let me engage you on that. This is a little bit more heavy lifting for those of you who've studied up in your Elliott wave. So we're looking at on Twilio from the daily, one big old extended two that did not make a new low, got really close. Beautiful orange three that can be broken down very simply by motive wave there, no problem. I'd actually probably look at that as another flat. And then there is a possibility that we're doing an ending diagonal in Twilio. The rule with ending diagonals is your first wave should be the longest, your third wave should be the middle length, and your fifth wave should be the shortest. Okay, so that's the case here. If we do a ratio analysis of 3v1, 100% of 1 versus 3 is at 113. Obviously, we fell short of that and then backed away. Now we just did a 5v3. So 5v3, distance traveled in the 3, will be equal to 5 at 102.70. Okay, if we break above 102.70, that means wave 5 is longer than wave 3, which leaves wave 3 as the shortest within the motive, which cannot work. It cannot be the case. So the minute we break above 102.70, this count is eliminated. I know where we are, and I think we're going to go significantly higher in Twilio. I don't have option positions on, but it is a holding in our portfolio that I'm tracking for members of trading analysis. So PYPL right here. Okay, I'm trading a live $100,000 portfolio ever since November, outperforming the S&P by, I don't know, 5 or 6%, which is fun. Okay, so just kind of live equity only position, but I will be looking to put on Twilio positions. All right, those are a couple setups for you. Netflix. Let's talk about Netflix. I don't know what you're talking about, Brian. Okay. Netflix, huge move. This is what I was talking about on CNBC last night. Very interesting corrective rally, corrective sell-off, I should say. There's a couple different ways to interpret it. They all seem to be corrective, namely just a big three-wave WXY complex mess from 420 down to 228. We have rallied sharply from there. I don't have an option trade on in Netflix. I kind of wish I did, but I'm waiting for any kind of pullback, but it's just an amazing move up. As I was talking about on TV last night, the way you do a proper channel, according to Elliott, is you connect wave 2, verse 4, and then you project up from wave 3, okay, to get wave 5. So you do a 2v4, right? And then you project up from wave 3, and that is a possible stopping point for wave 5. And if you look over there, that's potentially $600 in Netflix. Pretty amazing. Okay, so that's stock that we really have to look for. Netflix for earnings is, let's see what the expectations are. Netflix are looking for $25 move from 354. So you're talking 380 is the expected move for earnings. 111% implied volatility for the life of those options, just 2 days to go, and then it certainly drops away. It's hard to play this one for me. There's going to be a massive, I think 25% is actually understated. $25 move, we're talking 380 or 320, 325. I feel like that's understated. I might need to put an option trade on with our members. I feel like there's going to be a bigger move in that prior, considering what's happened prior to that. So Netflix is on the radar. What else we have? Netflix. Goldman. Talked about Goldman. Pre-earnings, I started off with that. And the other thing, kind of the last thing that I want to share with you guys, then I'll open it up for questions, is there's ways to kind of get behind the Elliott wave count from my point of view, to figure out, use internals, use sector rotation, use intermarket analysis to give you more confidence in your wave count. And I love kind of, for me, when I finally felt like I have a solid handle on Elliott wave, which was 10 years ago, when I added intermarket analysis to it, I felt like I had another dimension. And a component of intermarket analysis is sector rotation. And there is some sector rotation happening right now. And this is going to look really messy because normally I have this stretched across 3 screens. But there's some sector rotation that's happening right now that I think is of concern. And basically, to skip to the point, but I will show you the specifics, it gives me a little bit more confidence that that fib resistance zone that I showed you at the beginning of this video is going to hold. The first thing is XLU, utilities, relative to the S&P. So you can see that utilities are right up on the highs, 57.26, backed off to 52. But look at what the XLU SPX ratio has done. XLU is outperforming S&P by simply dividing the two. XLU is outperforming S&P. That is a risk-off sign. XLP, consumer staples. We've held the lows from 2016, 2018. We tried to break to new lows in December, but we're coming back. Staples have underperformed the S&P heading into spring to summer of 18, but all of a sudden, back half of 18, look what staples have done relative to the S&P. They've moved up. Staples outperformed the S&P, not a good sign. Real estate, major underperformer in the rally for a long period of time, but then look, September of 2018, we just made a new high in the ratio. You got real estate outperforming. So when you put that together, you've got staples, utilities, and real estate. Those are defensive sectors outperforming. That gives me a little bit more confidence to say that the resistance zones that I showed you might work. Another one that tends to be a defensive sector is healthcare. And this one is just, look at that ratio compared to the S&P, just on a tear. All of that is not a good sign. And the thing that I'll leave you with, and again I'll leave it over, send it over to questions here, is stocks and bonds are enjoying a pretty good inverse relationship here. So this is the yield on the 10-year, on the US 10-year, overlaid on the S&P, and you can see there's a fairly good correlation, fairly strong correlation going back to 2017. A little sloppy here in early 17, but looks like they align here in late 17 into 18, up into 18. They drop together, yields and stocks trading together. But check this out. Whoa. Yields are not even coming close to confirming this S&P rally. And when you square that up with this potential zone of resistance that I talked about at the beginning of the webinar, like that makes me really, really concerned. Okay, so what are we going to do? I could tell you if we break above here, we're going into delta neutral, slightly positive delta, theta positive butterflies, just looking to take advantage of the future range that'll happen over the next 12 to 18 months. Okay, we will exist in that zone. If we start to sell off from that zone, first thing that we're going to be doing is we're going to be getting down setting up option positions to get to the minimum 3v1 fib projection at 2184. That's buying out of the money put debit spreads. It's buying broken wing butterflies, unbalanced butterflies. Sometimes I do a combination of unbalanced and broken wing butterflies. There's a lot of ways we can get directional on the way down, but I am mind wide open right now, ready for anything and very content. I'm prepared on either side of the trade. I am long in my portfolio that I showed you. I'm very small in our option positions. This is the fewest amount of trades that we've had open, and that's exactly the way I want it to be. So let's leave it there. Go ahead and throw some questions in there, guys, if you like. 7 minutes before the open. Let's see, what do we got? Brian is kind of trolling a little bit. He was saying, "Why did you sell all your stocks?" That was a CNBC headline, and I think, as you could tell, I'm a trader, so I get in and out of the markets a lot. I buy stocks and I sell stocks. And I trade, right? So I might have a trade on for 2 days and say, well, damn, that's wrong. Maybe I need to get out and realign myself. I'm not really sure what else to say on that. TLT, sure. I should have mentioned that one. And Brian, don't be a troll. The world has enough trolls. For TLT, it's hard to do a good clean bond count here, guys, because it's a manipulated market. Obviously, the government's involved all the time. It's not a freely trading market. I'm thinking that this was just a big ABC down in the bond market. We're beginning to move up. I'm long bonds as part of my risk off hedge in this model portfolio that I'm trading. I've got a 6% allocation to bonds in TLT. So it's looking pretty good. I do have a wave count on the smaller time frame that actually says bonds might be at a bit of a buy zone here. I'm looking at orange 1, 2, orange 3, orange 4. Pulling back into the prior fourth right there at 120, looking to move up there in wave 5. So I'm actually, that ties in very well with the resistance zone that I just mentioned. So wave 4, testing the area of the prior fourth, looking to move up. So for some of you guys looking to do the shorter term count, that's what I would look at. The dollar, I think, has gotten to be a very difficult trade, and Alex, who does our foreign exchange and crypto services, I believe he's looking to get bullish on the dollar based on the possibility that this is either a wave 2 or it's an A, B, C. Doesn't matter. Either way, we should begin to rally in the dollar. Gold, I'd love to be short. I think the gold market has had every opportunity in the world to rally up with all the stock market volatility through 1400, and it just can't. It just can't. It's been stuck in this triangle for like 3 years. It's possible that we're in a big B wave triangle. E wave of the triangle is testing the 50% to 61% relationship of the alternate C wave right here. So C versus E, you take projection of C compared to E. That's your stopping zone right there in gold, 1290 to 1320. If you hold, you could be short, and if actually, I don't think the stock market I don't think gold really cares which way the stock market goes. The biggest help would be if the dollar were to find support and the gold market to sell off. It's really hard to be bullish on gold here when, again, it's had every opportunity to sell off. Every opportunity to rally in either stock market volatility, which is deflationary forces, or we did see some uptick in inflation. Gold had the opportunity to rally on inflation hedge, and it just couldn't do it. So I think it's a broken market. Yeah, Big Bill on Netflix. I think I might be doing like a long straddle or something like that. I feel like a $25 expected move in Netflix with everything that we just saw is understating the potential move. Yeah, I'm not wasting time. Don't worry, guys. Robert Kelly, is that the Robert? Is that the? I don't want to call you out. Gold there. Crude, Alex, my brother. The world has enough, Charlotte. And I'm extra sensitive because like every time I go on CNBC, like the biggest YouTube trolls aren't too bad, but Twitter trolls, oh my God. They should be sent out on a desert island somewhere. So on the train ride home, I'm just reading all my trolling comments. There's so many angry people in the world. Why is everyone so angry? What's that? Where's that come from? Alex is my new neighbor. Good dude. Anybody gets themselves in trouble, need a lawyer, come talk to me. I got a guy for you. So crude oil, crude on the longer term count, I find to be very challenging from a longer term point of view. The whole decline from 2008, there was a credit crisis, A, B, C, big drop. It really doesn't have impulsive qualities on the way up, which makes me think that we could be just falling into a sideways range here in crude. I don't have anything that I'm very confident in. I think the move up from December 2018 can be analyzed. Oh, shoot. Let me go back. Sorry, I got to get used to that. Let me go back. Here's that crude oil chart again. A, B, C, and then we're going to go up in sort of this A, triangle B. This move up, as I said, doesn't really have impulsive qualities. So I don't have a strong feeling. I don't feel like I know where I am in crude. We could be just kind of going sideways inside of some sort of X-wave triangle or consolidation. So, but like I was saying, what I do have some confidence in know where I am is here. From the lows in December, I think you can start to analyze this as a 5-wave move. It's a little 5-wave move that does track well. Crude could move up into the mid-50s. I'm not trading it. I don't really have a lot of interest in it. I just don't have confidence, as I said, that I know where I am in the crude oil market. So that's fine. Nothing, I don't know. If you guys have thoughts, let me know. Yeah, sorry about that. No problem, Alex. Financials. Yeah, so XLF was the weakest, the weakest sector. And then the bell's open. We're already through. So this is wave 4. If the financials are going to continue to be an underperformer, they have to stay out of 2610. They have to. And I can't believe how well they're responding to earnings right now. So you should stay below 25 and you have to stay below 26. If not, I don't even have a corrective count worked out, but it would just be WXY. So it would be ABC X, ABC down, and this whole thing's a correction. So guys, I don't know. And I'm perfectly content not knowing. So here we are, 2614. It's exciting. We are right at that zone. I've waited for this for a while. $26.14. Looking at the internals on the open. Pretty quiet open, actually. Vol spread opens way down. Put the call opens at 0.7. Advanced decline. 500 more advancing stocks than declining stocks. Quiet open. All right. Any other final questions? Long-term Amazon. Yeah. I put a bearish call on Amazon. Took a lot of flack for that on CNBC. But the whole point of that was, as I tried to make it very clear, if the S&P were to break through 2100, 1800, we have significantly lower to go in Amazon. If the overall market doesn't sell off, then we might have just seen an ABC down. Could be A, triangle B, then abbreviated C. And just like the overall stock market, if we break up through 2700, we do have a B wave move higher, right? So we're traders. We're not analysts. Lulu, good one. Twilio, Twitter, Twilio opens up. Oh, there we go. There's Twilio. Okay, cool. Cool. So I'll tell you what, guys. Watch this. Remember we talked about Twilio? We're through the invalidation. Process of elimination. Boom. And I'm saving that. So everyone who's connected to my workspace just got the update. And this is now the preferred count. We need to go to work on Twilio. Ending diagonal is no longer valid. Oh, that's awesome. That's going to be a fun one to play. All right, guys. So, hey, fun session. Thanks for joining us. And if you are watching, please hit the thumbs up button on the YouTube screen. Let us know you like it. Throw some questions, comments, insult. Don't be a troll. If you want, I don't care. It doesn't bother me. Throw some questions down there. Amazon's on the move. This market's acting strong. Come check us out at tradinganalysis.com. Basically, we are your one-stop shop for analysis and trading alerts based on the analysis with real capital, as it says right above me. Real-time analysis, real trades, real capital. I go on TV and I'm an analyst and I have an opinion. But when it comes to the trading end of the business, you're constantly moving, and all the traders on the desk. I had this conversation with these guys in the green room, and you got to trade. You got to have risk management. Trading is very much an exercise in trying to study math psychology, and it's very imperfect. It's an imperfect science. So come watch the process in real time at Trading Analysis. You can take a trial. This is a new website the team built for us. It's good. I don't know how to take a trial, though. I don't know. I'm sure you'll figure it out. Looks like we need a trial button. So we do Forex, we do cryptos, we do stock options, and we obviously are pretty well progressed with the Elliott Wave software that we use, which is called Motive Wave. We share every piece of analysis that I do. I hit the save button and it's immediately disseminated out to everyone who's connected to my workspace in the cloud. So as my Elliott Wave counts are updated, yours are as well. So that's another very cool thing. All information can be found on the partners page, which is right here. Okay. The trading platform that I'm using is TD Ameritrade's Thinkorswim. There's charting right there in Motive Wave. I'm working on a Falcon trading system to do this webinar. And I think that's all I got for you guys. So thanks for listening. Have a great rest of the week. Those of us on the East Coast, we're going to get crushed with a huge snowstorm. So that's going to be awesome this weekend. Can't wait to get out and play with the kids. And we'll leave it there. Thanks, and see you guys next week.